Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Parmar.
Welcome to Wealth Matters podcast. This is another episode of Monday Experiments, right? My very first foray, as I mentioned before, in my real estate investment, single family resident, I lost all my capital. And believe it or not, I syndicate money now on my deals. And my very first syndication investment as passive investor, I lost all of my money. And that had to do with, of course, not performing enough due diligence and also relying on some celebrity gurus who sell their courses and who um, who sell investments, right? So, of course, everyone wants to sell their investment because they want to get investors, but also just relying on them without performing enough due diligence. So, let's talk about what is a real estate syndication. Real estate syndication is a way for a lot of people to come together and invest in a large real estate deal, right? So it's similar to when I spoke about crowdfunding. This is also crowdfunding, just that this is not usually advertised on websites. It's pretty much available through the syndicators or operators. So, as I mentioned before, I love real estate. And by the way, nowadays, all the syndication deals I'm doing, they are performing so far good. And also, I'm mostly investing in my own deals with my investors. So that way, of course, I'm performing a lot more due diligence than I was before because I'm an active as well as a passive investor in this particular deal. So, because most of the time, real estate investments, a large real estate investment require huge sums of capital. Typically, to bypass such limitations, groups of investors and an individual or more an entity referred to as syndicator or sponsor or operator form partnerships known as real estate syndication. In syndication, the syndicator or the sponsor assumes the role of the scout and a manager who simultaneously assesses, develops, and manages the properties while the investors act as the provider of necessary resources for the successful execution of the real estate investment. So usually the syndications are structured in a limited liability company, LLC, and the sponsor or the operator is are referred as general partner, whereas the investors are referred to as limited partners. So this way, they are able to come together and pretty much take that investment, right? Be it it could be 5 million to 5 million, 10 million, 20 million, and you may see even some syndicators are like Grant Cardone and all. They are buying property, and Ken McElroy, they buy property 50 million, 100 million worth as well. Let me talk about this particular investment, which I invested through a San Francisco Bay Area operator, and the property was in Las Vegas. I am not going to take anyone's names here. Of course, I spoke about micro ventures and a lot of other businesses, Seed Invest, because they are available publicly. It's open for everyone, so I can review them. I don't want to, take the names. Of course, if you want to reach out to me, I'll definitely share the names because I do want people to look out for this kind of gurus and celebrities who actually don't do any legwork, and they were just lucky that they were able to double, triple, or even 4x investors' capital because they started investing in real estate or multifamily or mobile home park in 2012, 13, because within 2 or 3 years they were able to triple the money, right? So look at, if you want to invest in a very high quality asset, then look at someone who has been investing in real estate before 2009, before 2007, so that they have seen the crash, and then you can ask them about what happened, how did they perform, right? And if you are going with new operator, then definitely make sure that the new operator has partners who can support him or her in this journey, right? New operator is not a bad thing, but at least don't look at what they have done so far. Look at, of course, the track record is important. I'm not gonna say that it's not important, but when they talk about track record, definitely look at it in this perspective, that are they doing the same thing? So this particular operator group, they have been pretty active in single family and then multifamily space. So when they decided to take on student housing, I did not realize that housing is a whole different world. Of course, now these indicators, the same operators are, of course, they're selling multifamily as courses and whatnot, and they talk about multifamily being a resilient industry. They still are mostly doing industrial of flex space. They are building new condos, new fourplexes, so RV park, resorts, etc. So they themselves are not doing multifamily. I don't trust them anymore, because if you are selling yourself as multifamily guru and expert, then you should be focusing on what you know. And this is exactly what happened in this particular investment, because they messed up. They didn't know student housing. They thought they can just jump in any new space and start performing. So that's what I believe. This is why I changed my course. I don't do single family or multifamily. Pretty much my focus is now on mobile home parks and senior housing, and that is all I would do for now. Of course, if an opportunity arises, I may get into self storage, but that's about it. And you may have heard about Bitcoin mining and cryptocurrencies. Yes, that's my other passion, and I have been doing that since 2017. So I'll continue to do that, as long as it has benefits. The two benefits I always look for in an investment, and both of those, the one is cash flow, and the second is tax benefits. So in this particular case, I invested 50K for 50,000 from my solo 401k, and actually I will talk about that in next episode, how you can invest in real estate and a lot of other things using your IRA, 401k, etc., and why you should do it or why you should not do it as well. So in this case, they were acquiring the property, and I'm going to share my screen. If you're listening, then I'm sorry about that. But if you're watching on YouTube, you would be able to see. Again, I don't want to take names. So if you want to know the syndicator this was, please reach out to me. So total project cost was supposed to be 23 million. And as you can tell, NOI, exit price at 6.5% cap. This is one of the things you should look for. You should always look at, the cap rates are compressing, but you never know what will happen in 5, 7 years, right? So I look at reversion cap rate has to be at least half a point higher than current cap rate, market cap rate. And if it's at least 1 point higher, then it definitely calms me down pretty much. So all of these numbers, they showed the number that in the end, member would profit 115% and 15.8% IRR. None of this happened. I invested in 2017. In 3 years, they sold the property last year for 26 million, I think, at a loss. So all the members lost each and every penny of their investment. This is devastating. I would survive because I'm a risk taker. I'm adventurous. I knew going into an investment that I could lose my capital. And my other investments are working fine, but for a lot of other investors, this could be a big issue if you are return. So this is why syndications are a great way to build wealth, but do your due diligence. And of course, I don't want to scare anyone, but I always want to talk about the ugly side of an investment first before I can show the good side of the investment, right? So in this particular case, they didn't pay any cash flow for 3 years. And after 3 years, they sold last year because of COVID, they sold the property at a loss. There were lots of misses in this case. They just couldn't perform. They didn't know the Las Vegas market, how it will perform. They did not know how student housing market is. So there were lots of misses in this case. So, and I have interviewed Jeremy Rowe on my podcast. One of the things he recommends checking is running a background check on the syndicators or operators. I wish I would have done that. One of the operator had a bankruptcy filing about, I think, 7 or 10 years ago. I don't remember exactly, but if I would have seen that, I would have decided not to do it, not to invest with him. So that's one of the rule. Of course, do perform your due diligence, understand the market. Don't just look at numbers, because a lot of time to get the investors in, most of these people, they hype up the numbers, right? So don't look at when you're, let's say, comparing 2 or 3 different investments, don't just compare them by, oh yeah, I'm gonna get 20% IRR in this deal, but the other deal is only 17%, so I'll go with the 20% one. Do look at the track record of the sponsor, but also focus on, are they doing the same thing they were doing before, right? Because all of us entrepreneurs, investors, all of us have shiny object syndrome, right? So these people, they see I do that all the time. And this is why I shifted my focus into mobile home parks and senior housing, so that I can learn as much as I can in those industries, as well as, I don't want, I'm not saying I want to be, I will be an expert, but at least I can be someone who, you can rely on about those industries. So that's all I wanted to share. Each and every penny lost, but, lessons learned. Moving forward, we're not gonna make that mistake again. Of course, I still made mistake again in other investments, but overall, I learned my lessons, and I know what I need to do. Same way, I'll only invest in the assets I know, or I want to focus on. So do let me know, comment in YouTube, email me if you are listening to this on Apple Podcasts or any other podcast platform. Please subscribe on YouTube as well as iTunes, and do leave a review as well. I'll really appreciate it. And remember, sharing is caring. So do share this with your friends, because all of us want to make money. All of us want to grow together. So let's invest and grow together. Have a great one.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!